A business structure guide, not LLCs or corporations. Business structure introduction. Many people want to start a business but they have no idea of the many business options like sole proprietorship, business partnership, joint venture, strategic alliances/strategic partnerships among companies, contract manufacturing, cooperative business/co-op business, husband and wife team/family business, limited liability company/LLC, limited partnership/limited family partnership/LP/FLP, incorporating a business, going public to sell stock, either on an exchange or privately, take your corporation private, business spin-off, add a new business to your existing business. I cover all these business options here. Starting a business is a legal matter. You have to follow government rules. Legal books about business are at number 346.73 at the library. Business books are at number 650, number 659 at the library. The advantage of a sole proprietorship is simplicity. You can incorporate for about $100 nowadays, like at LegalZoom, $150 plus state filing fees, and inkfile.com, much cheaper. People incorporate and start LLCs in order to avoid personal liability. With a sole proprietorship or partnership, you are personally responsible for all debts. With an LLC or corporation, debtors can trash the company but they can't touch your car, house, or personal bank account unless you defrauded them. You have to decide, then go by the rules, because if you don't, some government agency will probably sniff you out after you get a complaint against you and close you down. You need a county business license to get a business bank account, so there are very few ways around it unless you do business totally online with PayPal and your personal bank account, or straight cash like at a flea market. Some people do business on the fly with businesses that have few health and safety codes, like a used furniture store or a blacksmith. It's mostly straight cash. I knew a guy who had a used furniture store in a college town. He had no business license or business bank account. He simply rented the store and did mostly a cash business. Entrepreneur Magazine. Entrepreneur.com. EntrepreneurMag.com. Chapter 1. Business Structures Guide. Business Structures Info. Just about the first thing you should consider before deciding to start or purchase a business or start one is the legal form you will be operating under. There are basically 7 choices: sole proprietorship, partnership, limited partnership, corporation, limited liability corporation, cooperative, non-profit organization. Each has a number of advantages and disadvantages. Every state regulates these types of businesses in their own way. The Federal Trade Commission regulates franchises as well as the state governments. The type of business you decide to form determines how simple or complex it will be to run, taxes you will pay, control of it, and liability for the business from your personal assets. Under all the major forms of business, sole proprietorship, partnership, corporation, wages and salaries paid to employees are subject to withholding of state and federal income taxes, Social Security, FICA, taxes, and unemployment taxes, so there is no advantage to anyone in terms of these issues. Nalo Press, 950 Parker St. Berkeley, California, 94710-800, 992-6656, Nalo.com, publishes books about how to set up different manner of businesses. You might find such books at number 346.73 at the library. Sole proprietorship info. A sole proprietorship is a business which legally has no separate existence from its owner, hence, the owner is personally responsible for all its debts. Most people that start businesses, especially for the first time, usually start a single proprietorship. This could be as simple as getting a local food serving license and simply hanging a sign up on a small restaurant which reads Tony's Pizza. It's simple, startup costs are low, government regulation is minimal, and one man is in control. Sole proprietorship is the most common for a simple one-person operation. To start a sole proprietorship, you need only prepare a few simple documents such as a fictitious business name statement, also called a DBA, doing business as. A DBA only has to be filed if you use a name other than your personal name to do business. The DBA is filed with the local county recorder's office. Get the DBA forms from your county recorder's office. You must publish a legal notice in a local newspaper in order to give the community an opportunity to oppose your choice of business name. There's some disadvantages to a sole proprietorship. The owner is responsible for all debts. If his business can't cover it, his creditors can go after his personal assets like his house. As a sole proprietor, you are self-employed. You must file quarterly estimated income tax returns and make prepayment of anticipated taxes with both the IRS and your local state tax authority. There is no sense of permanent continuity, meaning that when he dies, the business dies with him, and it's difficult for a sole proprietor of a business to do business with the big boys, particularly when it comes to raising capital. For legal purposes, you and your business are one entity. What this means is that there is no legal distinction between your personal assets and the assets of your business. You personally are liable for all your business liabilities. You report your business income or losses on Schedule C, Form 1040, Personal Income Tax Form, of your personal income tax return, or in some cases, Schedule CEZ. Sole proprietors also pay a self-employment tax, which is for Social Security. The value is about 15.3% of your business profit, calculated on Form 1040 SE and included with your 1040 tax return. You can take a lot of deductions and exemptions for your income taxes, but the self-employment tax has no such exemptions. Even if you get away cheap on income taxes, the SE tax will hurt. The advantage is that a sole proprietorship is the simplest legal form of business. It's not regulated by the state. No specialized filings or reports are required. There are no special rules you have to follow. Since the business is yours exclusively, you don't have to disclose business information or share decisions with anyone. Corporations give the owners/managers liability protection, but with a sole proprietorship, you personally are liable for business debts, which means that creditors can go after your house and other assets. In my opinion, the biggest problems with sole proprietorship is the income tax people. They like to investigate these types of small businesses and charge them for income tax evasion. If you want to start a sole proprietorship, decide on what name you will use to do business. If the name you choose is your own personal name, you are free to use it. If the name you choose is other than your given name, check its availability by calling the Secretary of State's office in your state. Your county might require you to put an ad in the paper proclaiming your intention to use that name for a business, and if nobody comes forward to dispute it, they will issue you a business license for a fee called a DBA, doing business as, or a fictitious business name. You might consider registering your business name as a trademark to protect it from being used by others. Establish a simple record-keeping system and report your income and expenses on Schedule C of your personal income tax return. Business Partnership Info 1. The second most popular way to start up a business is set up a partnership with friends, family, and/or business associates. A partnership is an association of two or more persons to carry on as co-owners of a business for profit. Legally, it is similar to a single proprietorship, except that several people are involved, usually by written agreement, with each taking responsibility for a specific part of the business. 2 friends could unite to open a restaurant, or 4 friends in a musical band could form a partnership. 2 or more individuals, or entities, that join together to carry on a business without forming a corporation are called a partnership. Ideally, you have a written partnership agreement which details your specific rights and responsibilities, even though many people start a partnership without a written agreement. If there is an oral understanding but not a written partnership agreement, if it ever goes to court over a dispute, state law will determine if it's a partnership, and if it is, the law will generally give each partner an equal share of profits and losses and an equal voice in the running of the business. Partners in a partnership can be individuals, other partnerships merging together, corporations, limited liability companies, or any combination of these entities. The players set up an agreement as to how each will contribute to the assets of the business and share in its profits and losses. Income is not taxed within the business. The individual players file the taxes for the business through their personal income taxes, Form 1040, Schedule E, but partnerships must file an annual information return reporting their income or losses, Schedule K1, Form 1065, and provide a copy of the filing to each partner, who reports his share on his individual tax return. Just like with a sole proprietorship, with a partnership you pay personal income tax on Form 1040, but over and above that, you pay a self-employment tax for Social Security, generally about 15.3% of your business profits, done on Form 1040 SE and included with the regular return. Partnerships have specific legal requirements. Forming a partnership is generally necessary when going into business with someone else. There are advantages and disadvantages in doing this. Besides sharing workloads and profits, the partners must get along well. It is almost always necessary to obtain legal counsel in order to set up a corporation or a partnership. It might be a good idea to write up an agreement each using your own lawyer. In some states, if one partner dies, the business must be dissolved unless there's an agreement in place. A partnership has some major weaknesses, much like a sole proprietorship, in particular, that if the business fails or there are debts due, even if they're not your fault, the creditors can legally go after your personal property, and if one of the partners dies or quits without a former agreement in place as to how to deal with this situation, the partnership is dissolved and you have to set up a whole new business. Partnerships are simpler than corporations. They are private. Unlike corporations, you don't have to disclose your records for public inspection. There is usually strength in numbers, which is why partnerships could be better than sole proprietorships, but then again, if several strong egos start up a partnership, chances are each will want to be the boss, so they will be butting heads at some point in time. The biggest disadvantage is probably that you do not get the liability protection offered by incorporation. Any liabilities and obligations of the business can be used to take the personal assets of the partners. A general partnership cannot sell stock to raise investment capital. You have to become a corporation to do that. Partnerships are difficult enterprises simply because it's very difficult to find good business partners who will share the load equally without ever breaking down into egotistical bickerings and trivial fights. Unlike other forms of companies which have no finite life, partnerships must have a termination date. The date may be extended by filing an extension, but they must have a definite termination date. Partnership relationships are governed by a contract known as a partnership agreement. This document sets forth the arrangement between the partners and is not intended for public record. This document can only be modified by agreement of all the partners. The general partner is responsible for the day-to-day business of the partnership, and he or she assumes personal liability for all debts and obligations of the partnership. If there is more than one general partner, all the partners have the same joint liabilities. If there is a disagreement that cannot be resolved, the partnership can be dissolved by one or more general partners leaving the business. To avoid the constant threat of dissolution when any partner threatens to leave, most partnerships have a provision that allows the general partners to vote on issues that override other rules. When there is voluntary dissolution, the individual partners assume any financial obligations of the partnership upon dissolution. When partnerships are formed, the states require that an Articles of Organization be filed with the Secretary of State. You don't need a lawyer to create a partnership, just a partnership agreement which includes the following factors: the names and addresses of the general partners, name and address of the business, purpose of the partnership, date it will become effective and date when it will expire, names and addresses of the partners, company name, terms of partnership, place of business, specific role of each partner, the capital each partner is contributing, how profits and losses are to be shared, the salaries or the rights to withdraw capital to be allowed to each partner, how much time each partner is expected to spend working on the business, the authority each person has to operate the business, sign checks, etc. How and who will manage the banking arrangements, where will you bank, type of accounts, signing authority, maximum withdrawal without approval from other partners. How and who will manage the business. Who is responsible for accounting and financial statements? Agree to the accountant and lawyer the firm will be using. Who controls the assets? Rules regarding the limits on each partner's authority. What he can't do by myself. How much pay will the partners take? How will the partners manage? Who will chair the meetings? Business insurance, health insurance. Will the partners take life insurance out on each other? A provision for a partner to withdraw at will and the right for the other to keep the business and continue on his own. How disputes should be resolved. Rules regarding silent partners. How the business should be distributed on dissolution. What about vacations, pensions, and other benefits? A provision for continuing in the event that one partner dies, is disabled, or goes crazy. If one partner wants out, what's the procedure? How do you pay him? How do you get rid of undesirable partner? How do you pay him? How to dissolve the partnership? How to bring in new partners? Partners' liability to one another, to third parties. Arbitration procedure for disputes. What about power of attorney should one get injured or go on a trip? What is the procedure to amend the company in any way at all? Put the partners' addresses on the partnership agreement, make them each sign their names, then give each a copy. Consider making a buy and sell agreement with your partner, S. This agreement requires the surviving partner, S, to buy and the heirs to sell, the deceased partner's interest. The surviving partner, S, then becomes the sole owner, S, and the heirs receive cash for their share of the business. Legal books about partnerships are at number 346.73 at the library. Nalo Press, 800-992-6656, nalo.com, publishes a book called The Partnership Book. Business Partnership Info 2. There are 3 kinds of partnerships. General partnerships. Joint ventures. Limited partnerships. General partnerships are the most common form of partnership. In a general partnership, each partner has an interest in all of the company assets. The usual split between 2 partners is 50-50 or equally among more than 2 members, but the split could be any percentage you all agree on. Every partner is obligated to act for the good of the company as opposed to just for the good of himself, and has the right to act on behalf of the partnership in business deals without telling the other partners. A general partnership can be sued as a business, and the individuals can also be sued personally. The partners are personally responsible for debts incurred by the general partnership. If the partners' names are not the name of the business, they must file a DBA certificate and publish a DBA notice. The partnership must also obtain an IRS employer identification tax number, EIN, even if the partnership does not employ anybody. Unlike corporations, partnerships do not pay taxes as a business, but they are required to file informational tax returns. The individual partners file individual tax returns. Just like with sole proprietorships, the partners file quarterly returns and make personal income tax prepayments as individuals. Partnerships are based on trust. A partnership works with misunderstandings. There must be an equal amount of value provided by each part. When building a partnership, look for someone with skills you don't have. Be sure to check in every once in a while and see if everything is all right. If you are small and partner with the big guys, or big and small guys want to partner with you, the big guy will always want to dominate the small guy and kick him out. Don't expect partners to be always in line with what you think. Disagreement is normal. If a partnership is slowly becoming a burden instead of a competitive advantage, dissolve it. Partnership agreement form. Partnership agreement made ____________________ 20 among of underscore 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 and underscore 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 of underscore 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 underscore. Whereas the parties, hereinafter called the partners, desire to carry on a underscore 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 business in underscore 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 and whereas the partners desire to define certain rights among themselves, and to make certain provisions as to their business, now, therefore, in consideration of the mutual agreements herein contained, the partners agree as follows. 1. Name and place of business. The partnership and its business will be conducted under the trade name of underscore 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 un. The principal place of such business of the partnership will be at underscore 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 un, or at such other location as the partners may agree. 2. Business activities. The partnership's general business shall be the operation of a underscore 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 business and such other activities as are necessary or incidental thereto. 3. Term. The partnership will continue until terminated under this agreement. 4. Books. The partnership books and records will be maintained at the principal office of the partnership, and the partners will have access thereto at all times. The books will be closed and balanced at the end of each year. 5. Capital. The partners having resolved to make equal contributions to the capital accounts of the partnership, the partners agree that the capital accounts will continue to be equal, except as hereinafter provided, and in such amounts as the partners will determine from time to time. If, at any time or times hereafter, further capital will be required for carrying on the business, such capital will be advanced by the partners in the same percentages as their capital accounts. No interest will be paid on any contributions of capital to the partnership. 6. Profit and loss. The net profits and losses of the partnership will be divided and borne equally among the partners. 7. Salaries and drawings. The partners will receive equal salary for services rendered to the partnership, and the partners will also have equal drawing and expense accounts, provided that, as to each partner, the partner continues to comply with his obligations under paragraph 8 hereof. 8. Management and duties. The partners will have equal rights in the management of the partnership business, and both partners will be required to devote substantially all of their time to the conduct of the business. Each partner will, however, be allowed to also engage in any other business without the consent of the other partners so long as such activities do not interfere with the partner's duties contained herein. 9. Restrictions. No partner will, without the consent of the other partner, endorse any note, or act as an accommodation party, or otherwise become surety for any person on behalf of the partnership. Without the consent of the other partner, no partner will, on behalf of the partnership, borrow or lend money, or make, deliver, or accept any commercial paper, or execute any mortgage, security agreement, bond, or lease, or purchase, or sell any property for or of the partnership. 10. Prohibition against assignment. No partner will, except with the consent of the other partner, assign, mortgage, grant a security interest in, or sell his or her share in the partnership, or do any act detrimental to the best interests of the partnership of which would make it impossible to carry on the ordinary business of the partnership. 11. Bank account. All funds of the partnership will be deposited in its name with such banking institution or institutions as the partners will from time to time determine. All withdrawals therefrom are to be made upon checks signed by either partner. 12. Death and disability. A. Upon the death of either partner, the partnership will be terminated as of the date of death of the deceased partner. Thereafter, the personal representatives of such deceased partner, or the person or persons to whom such deceased partner will have bequeathed his interest in the partnership, all collectively referred to hereafter as the estate, and the surviving partner will have the following rights, duties, and obligations. I. The surviving partner will be required to purchase the deceased partner's interest in the partnership at the price and under the terms determined pursuant to paragraph 15 of this agreement, and the estate of the deceased partner will be required to sell such interest to the surviving partner. The surviving partner must purchase the deceased partner's interest in the partnership by giving written notice to the estate of the deceased partner within 90 days of receiving actual notice of the death of the deceased partner, that he or she will purchase such deceased partner's interest in the partnership. 2. The term estate for purposes of this agreement shall be deemed a word of collective reference only. Insofar as it includes any personal representatives and any person or persons to whom any deceased partner will have bequeathed any interest in the partnership, its use will not be deemed to bind any such persons to any collective action, and they will each have all of the rights and privileges accorded to the estate of a deceased partner. B. Upon the disability, as defined in Section 105, d. 4, of the Internal Revenue Code of 1986, as amended, of either partner, the other partner will have the option to purchase the disabled partner's interest in the partnership at the price and under the terms determined pursuant to paragraph 15 of this agreement, and the disabled partner will be required to sell such interest to the other partner. This option to purchase the disabled partner's interest can be exercised at any time after such partner has become disabled within the meaning of this paragraph 12 and shall be exercisable by the purchasing partner giving written notice to the disabled partner that he desires to exercise such option. 13. Voluntary withdrawal of partner. Either partner will have the right to voluntarily withdraw from the partnership by giving 90 days written notice to the remaining partner of his or her intention to withdraw. In such an event, the remaining partner will have, for 90 days from the receipt of such notice, the option to purchase the interest of the withdrawing partner at the price and under the terms determined pursuant to paragraph 15. The remaining partner's option to purchase the withdrawing partner's interest will be exercisable by giving written notice to the withdrawing partner of his or her intention to purchase the withdrawing partner's interest, within the said 90-day period commencing with the date of the withdrawing partner's notice of withdrawal from the partnership. In the event that the remaining partner does not elect to purchase the withdrawing partner's interest in the partnership, the partners will proceed with reasonable promptness to consummate the liquidation and sale of the business and assets of the partnership. Any profits or losses which the partnership realizes during the period of liquidation will be divided and borne equally among the partners. The proceeds of sale will be divided and borne equally among the partners. 14. Legal disabilities. Upon the insolvency, bankruptcy, or adjudication of incompetency of a partner, or if a lien, attachment or garnishment is entered against a partner's interest in the partnership or its assets, or his interest in the partnership or its assets become subject to equitable distribution in any divorce proceeding, collectively legal disabilities, the partnership shall be terminated as of the date of such an event. Thereafter the other partner shall have all the rights, obligations, and duties hereinabove prescribed in subparagraph 12a, for the surviving partner in the case of death of one of the partners, and the partner under such legal disabilities and his receiver, trustee, committee, guardian, conservator, or other parties claimant of such partner shall have all of the rights, obligations and duties prescribed for the estate of a deceased partner in such subparagraph 12a. 15. Purchase price and terms. The purchase price and terms of the purchase of a partner's interest in the partnership in the case of death, disability, voluntary withdrawal, or legal disabilities of a partner shall be determined respectively as follows. A. In the case of the death or disability of a partner, the purchase price shall be one half of monthly net profits, as hereinafter defined, for months from the date of closing, as hereinafter defined, payable in consecutive equal monthly installments. B. In the case of the voluntary withdrawal or other legal disabilities of a partner, the purchase price shall be one half of monthly gross commissions, as hereinafter defined, for months from the date of closing, payable in consecutive equal monthly installments. C. The term monthly net profits means monthly net profits, exclusive of federal, state or local income taxes, determined on a cash basis, received by the partnership for the month preceding the date on which such monthly installment of the purchase price is due. In no event, however, shall any monthly installment of the purchase price under this paragraph 15 exceed one half of the highest monthly net profits earned by the partnership during the 12-month period immediately preceding the date of closing. D. In the event of the death, disability, voluntary withdrawal, or legal disabilities of a partner, closing shall take place 30 days after the sending of written notice by a partner that he or she will purchase the other partner's partnership interest as provided herein, date of closing. 16. Compulsory buyout. At any time, other than a time when paragraph 12, 13, or 14 hereof is operative, either partner, the offering partner, may send a written notice to the other requiring a compulsory buyout. The notice shall specify a price for the other partner's interest in the partnership and state that the offering partner will purchase the other partner's partnership interest at that price or sell his or her own partnership interest to the other partner at that price. The other partner must, within 6 months after such offer, either I. Purchase the offering partner's partnership interest at such price by giving written notice of such to the offering partner before the expiration of said 6-month period, or 2. Tender his or her own partnership interest for purchase at such price. Closing on the sale of a partner's partnership interest under this paragraph shall take place 30 days after the earlier of I. The sending of written notice to the offering partner by the other partner that the other partner shall purchase the offering partner's partnership interest, or 2. The expiration of the 6-month period. 17. Covenant not to compete. In the event that either partner purchases the partnership interest of the other partner, the partner whose partnership interest is being purchased agrees that, following the date of such purchase, he or she will not, directly or indirectly, I. Hold or acquire an ownership interest in any run business or engage in any other phase of the retail gun business anywhere within a 15-mile radius of for a period of 5 years from the closing of the purchase of such partner's partnership interest, or 2. Use or permit the use of any trade secrets relating to the partnership, including, without limitation, customer lists, marketing methods, cost, price, and other financial data, and will not, either directly or indirectly, communicate or divulge such trade secrets to any person, firm, or corporation whatever. 18. Notices. Notices under this agreement must be in writing and sent by registered or certified mail, return receipt requested, postage paid, to the partners at their last address as shown on the records of the partnership or at such other address with respect to any party hereto as such party may notify the other in writing. 19. Severability. The various provisions of this agreement are severable from each other and from the rest of the agreement, and in the event that any part of this agreement is held to be invalid or unenforceable by a court of competent jurisdiction, the remainder of this agreement will be fully effective, operative, and enforceable. 20. Binding effect. This agreement is binding upon and will inure to the benefit of the parties hereto and their respective heirs, executors, administrators, donees, successors, and assigns. 21. Governing law. This agreement is to be construed and interpreted in accordance with the laws of the state of underscore 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 underscore. 22. Entire agreement. This instrument contains the entire agreement of the parties and cannot be changed orally but only by an agreement in writing signed by the partners. In witness whereof, the parties have signed this agreement on the day and year above written. Witness, underscore 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 un underscore 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 un underscore 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 un partner witness underscore 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 un underscore 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 un underscore 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 un partner. Business partnership websites. 1stoplegal.com, legal forms. allbusiness.com. allcoarfilings.com/partnership-agreements. allaw.com/forms/business/partnership/partnership_agreement. americanlegalreview.com/partnership. business.com. businessinc.com. businesspartnership.info. Joint venture info. Technically, a joint venture is a partnership that is formed for one project or a finite venture that will not be a continuous business. In real life, sometimes two equally powerful companies get together to create a new product and sell it, but most of the time a joint venture is a big, well-established company giving money to a new, weak company in the hope that they'll make a lot of money for both of them. A joint venture is venture capital. Other than its finite nature, all the rules of a general partnership apply. If you embark on a joint venture, make up a written contract to keep the terms among the players crystal clear. A joint venture could be set in place permanently in such cases as two companies coming together to produce a certain product, offer a certain service, or to offer their goods and services in one particular geographic area. It's easier to form a joint venture than to wholly merge, particularly if the product, service, or marketing area is only one part of a large company. The joint venture can be structured as a corporation or an LLC. Each side contributes their share and they write up a contract. Joint venture websites. topics.law.cornell.edu/wex/joint_venture, joint venture overview. 1000ventures.com/business_guide/jv_main.html. 4jointventures.com. joint-venture.net. jointventure.org, Joint Venture Silicon Valley Network. jointventure.org, Silicon Valley. jointventure.org/programs-initiatives/programs.html, joint venture programs/initiatives. jointventurealert.com. jointventurecapitalgroup.com, Joint Venture Capital Group Opportunity Information. jointventurecapitaltoday.com. jointventureincome.com. joint-venture-magnum.com, the Joint Venture Directory. jointventureseeker.com. jointventuresolution.com, joining this joint venture club. jointventuretools.com. Strategic alliances/strategic partnerships among companies. A strategic partnership or alliance is a type of business structure where two or more for-profit and/or non-profit companies/organizations get together to share one or more projects. It could be forming a new company, a new product, helping out with some activist cause, etc. They don't merge or one acquires the other. It's just one project they work on together. Quite often a non-profit pairs with a for-profit company such that the for-profit gets publicity for helping the non-profit financially, but there are many strategic alliances between for-profit companies, particularly in the tech sector. Lots of them pair up for one project to develop some new product. Just read the tech news. Microsoft has paired up with a number of companies. Sun, Oracle, EMC, and Cisco are companies who I've seen in the news partnering up with other tech companies. Some companies are strategic partnership companies. They're like venture capital companies. They look for companies to invest in. Try number 658.044 or HD 69 at the library for books about strategic alliances. strategic-alliances.org, Association of Strategic Alliance Professionals. 1000ventures.com/business_guide/partnerships_main.html. allbusiness.com. allianceanalyst.com. alliancestrategi.com. strategic-alliances.org. strategic-alliance.ltd.uk. strategicalliance.org. strategicalliancegroupinc.com. strategicalliancemarketing.com. strategicallianceonline.com. strategic-alliances.strategic-business-alliances-faqs.html. Contract manufacturing info. If you have some unique product that you have a patent on, make money on, or have invented, it might be cheaper for you, rather than building a production facility yourself, to hire an existing company to manufacture it for you. They build it, you pay them, then do the distribution, marketing, and sales yourself. This is sometimes called outsourcing. You can even do this with a foreign company, as many businesses do. They get a Chinese or Mexican factory to build their widgets, then sell them in America and everywhere else. thomasnet.com. b2bchinasources.com. Cooperative business/co-op business. Co-ops are businesses owned by a large group of people with the intention of helping each other get better deals on products and services and live a better life than with ordinary for-profit businesses. Many co-ops are employee-owned. The workers of a company get together and buy it. This sometimes happens when the company is going through hard times. Some are people in a community coming together to help themselves, like food co-ops, food stores, and a television tower everybody in a community chips in for in order to get TV signals. If you're socially conscious, you might consider starting or investing in co-ops, which often seek out investors in the form of partners who share in the ownership of the company and get part of the profits. The most common types of cooperatives are utilitarian in scope, formed to do the greatest good possible for the members, such as utility cooperatives, agricultural cooperatives, and investment clubs. Individuals and businesses join together to help each other out. The people get the services they want while the business makes enough money to sustain itself. They are generally not geared for profit but to help out all the people involved. A co-op in the business sense for profit is simply a number of people who by themselves don't have enough money to start up a business, so they get together and agree to each contribute a bit of money to start a business and each spend X number of hours at it per month to either pay off the business as co-owners, then split the proceeds when they sell it, or to work at the business as a team and expand until every member has his own store or something like that. Co-ops don't have to have large numbers of members. Many co-ops have from 4 to 10 members. Think of a regular business, but instead of 1 or 2 owners, 3 or more get together to pool their efforts for a common capitalist purpose. There are service co-ops which might offer childcare or housing, financial co-ops like credit unions, and retail co-ops like supermarkets. Most co-ops are state or provincially regulated. A co-op is simply a group of people who come together to form a special kind of corporation rather than the 2 or 3 who usually start a corporation. Although their motives can be socially conscious, to help the community, etc., they could be doing it for the good of themselves to make a profit for their in-group. CoopAtlantic.ca, Atlantic Canada Co-op. OurCoop.com. brain.org.za/start/coop.html, The advantages of forming a cooperative business. Businesslink.gov.uk, Go to Workers' Cooperatives. Coop.gc.ca, Cooperative Development Initiative in Canada. CoopAmerica.org. co-op-assist.co.uk, Cooperative and Community Business. co-opdirectory.co.uk/about_setup.html. coopdirectory.org. Co-op America. 1612K St. N.W. Number 600. Washington, D.C. 20006. coopamerica.org. Analysis of the business types. The most common advantage to forming a corporation is that a corporate structure will semi-protect the property you personally own but not protect it if you commit fraud. As an example, suppose you own a home and car. You form a corporation to protect these possessions from business losses. Yet, if you can be found guilty of misusing corporate funds, your business creditors can pierce the corporate shield and come after your possessions. Another potential advantage of incorporation is to go public and sell shares to raise money. Basically, if you invest everything you have in your business as most newcomers do, you don't usually need a corporation because you have nothing to protect. Your household possessions, personal belongings, generally your car, and even a portion of the equity in your home is protected by the homestead provision of the Federal Bankruptcy Act and cannot be taken away from you. As a sole proprietor or partner of a business, you will be paying taxes on your overall earnings much the same as if you were holding down a salaried or hourly paid job. Whether you do or don't take out money as a salary will have no bearing on the earnings of your business and tax return. The often advertised advantage of incorporating, that you can manipulate your salary in order to save on tax dollars, is real because of corporation laws. However, the IRS frowns on this practice. When your business is successful and making a lot of money, definitely check with your accountant on the advantages of incorporating. As a corporation, you will be subject to a number of other drawbacks, generally higher state taxes, stricter laws concerning the operation of your business, more elaborate accounting procedures, and legal papers that are required just about every time you make a major move or sign almost any contract. Thus, your legal and accounting fees will be much higher as a corporation than will those required for a sole proprietorship type of business. As a sole proprietor or partnership, you will find many areas require the registration of your business name. The cost, however, is minimal, ranging from $10 to $100. Overall, it's best to start as a sole proprietorship and move up to partnership, limited partnership, or corporation when you're ready. Business structure websites. Go to your state's corporation/Secretary of State office to learn about the business structures in your state. irs.gov/businesses/small, your form of business determines which income tax return form you have to file. nalo.com. allbusiness.com/company/activities management/company structures. allbusiness.com/business_advice. allbusiness.com/business-planning/business-structures. allaw.com/topics. bizfilings.com. business.com. business-directory-usa.com. entrepreneur.com/startup basics/business structure. findlaw.com. formacompany.com/usa-company-usa-business-structures-guidance.html hg.org/busstructure.html lawvantage.com lectlaw.com/tbold.html money.howstuffworks.com/biz-structure.htm myownbusiness.org nas.org, National Association of Secretaries of State nalo.com/resource.cfm, ownership structures PAOPEN4BUSINESS.state.pa.us quickmba.com/law/org sba.gov sba.gov/small-business-planner/start/choose a structure score.org/leg_6 LLCs sec.gov Securities and Exchange Commission smallbiz.com smallbusiness.findlaw.com/business-structures smallbusinessnots.com smbiz.com sos.state.tx.us/corp/business-structure.shtml start-business.com